Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce on the market and look for something to trade. Well, if we're watching the market at all last week, obviously post-election it shot up, and then the last few days it's come back down to pretty much where it started about a week and a half ago. So we've essentially gone nowhere, but it's been a pretty big down move in the meantime. This is the S&P 500. Obviously, if you look at the NASDAQ, it always looks fairly similar, as you can see. And if we look at the Russell again, a similar kind of story. So when volatility picks up, which it has, now that the market's dropped a little bit, we obviously like to trade volatility when it gets higher. And with the indices taking a bit of a dive, let's just jump into the most volatile index. Seems like a good time to get into it. They've both all taken a bit of a pullback. So if we look at the S&P 500, we see the IV is at 20. If we look at the NASDAQ down here, we see it's at 21. Again, I'm left-handed because I'm still not using my right hand just yet. And if we look at the IWM, we see it's at 25. Okay, so the IWM is the most volatile of the three indices. Let's go ahead and throw a trade on in the IWM. So if we go to the trade page, I'm going to go right here to the 44 days. I've already set this up to save me the time of trying to do it left-handed and bore everybody here. But essentially all we're doing is, it's right at about 228. We're going about $13 up. On the call side at 241, $13 down to the 215 put on the put side, making this a $2 wide iron condor by buying the put and call $2 away. And again, if we're collecting at least 66 cents or more, this will be our trade for tomorrow. So assuming that nothing changes, we open up right here. We're going to go $13 up and down and look to collect at least 66 cents or more on this trade. That is our trade for Monday morning.